Check. Yes, I'm back. Look at this. I had to go run inside because you know how Miami wants to act. It came and threw some clouds on me. And then I move everything over there under the awning. And then the cloud hangs a hard right. You know. Anyway, we're back. Not like you noticed. Movie magic, right? So look, check out 522. We're on page 86, right under increasing term insurance. We've got features of term life, right? That little paragraph right there, that paragraph is nothing more than the thesis to the next section, right? So at the bottom of that paragraph, just highlight option to renew, option to convert the policy. Renew the policy, convert the policy. Convert the policy into what? Remember, those different types, we have the term life insurance. We got a whole life policy. Term life only covered us for a short time frame. Whole life covers us till age 100, right? So this conversion is changing a term policy into a whole life policy. But let's look at this. Jump over those diagrams there. Highlight the headline. Option 2. Let's see. I'm over here acting like a boomer using the paper and whatnot when I got this beautiful digital version that my millennial prepared for me. All right, so this option to renew, take that first line right there. Guaranteed renewable policy allows the policy owner to renew. Jump down to the next line. Before its termination date without, skip a little bit over, evidence of insurability. Look, catch this. That evidence of insurability, guaranteed insurability, right? If I guarantee the policy is renewable, how can I put limitations and restrictions on you, right? If it's guaranteed renewable, that means that you're allowed to renew the policy without having to go back through underwriting. But don't forget what I said. If we went back a little bit, where was that? I think if we went back a little bit, we were talking about how, you know what? I'm over here. I know this content a little bit too well, I think, because I'm thinking we got to go back a page and we actually got to go ahead a page. See, David, I'm going to blame that on David too, because if I would have went back to my book, I would have saw that, right? But see, I use that digital stuff and he's over here probably texting me instructions now and all that stuff. This guy. Anyway, where was I before I was talking trash, David? All right, so look, under that option to renew. So you got all that? Now let's jump over to the next page, right? At the top of the next page on 87, the premiums for the renewal period will be higher than the initial period. Duh. The initial period, let's just say we were talking about a 10-year term, right? That means I'm in my prime. I'm 49. 10 years ago, 39. That was the time, that was my original age back there where I took it out, right? So I go ahead and renew my policy. I'm 10 years older. Well, the policy premium's got to reflect the increased risk, which is the new 10 years. Only thing they can discriminate against, age, right? So look, after you got that line right there, the premium for the renewal period will be higher than the initial period. Skip the next line and then start off with the renewal options. Typically provide renewals until a specified age. And then after that, advantage, and then go down to the next line. Allows the insured to continue protection even if uninsurable. Nice. So if I've got a guaranteed renewable policy at the end of my 10-year term, it doesn't matter what happened to me. They are renewing that policy until when? Until whatever date they specified. So whenever you see typically, generally, anything like that, what am I going to say? Boop, get it out. Get it out. Why? I can't test you on typically, sometimes, and usually. I can only test you on exacts. So here we did that uninsurable thing, right? Now let's go down to the next paragraph and highlight that bold. Annually renewable term. And then right after that, next line down, grab yearly renewable term. Well, I just went ahead and mentioned in my example that we were talking about a 10-year term, right? Terms can go all the way up. There's all you choose how long the term is, but the most basic type of policy you could possibly purchase is a 1-year temporary, aka term policy. Most basic. It's not like I could sell you a 6-month term. I don't know, maybe I could. I mean, I've never heard of it. Annually renewable. If you get this one wrong, you're not meant to be an agent. I'm just telling you that right now, right? So if at the end of my 10 years, when I renewed, my policy premium went up to reflect my new age, right? On an annually renewable policy, every year I'm renewing, every year the premium will reflect my new higher age. So every year the premium goes up. Highlight this. So you got the two bold, annually renewable term. You got that yearly renewable term. And then over here, I want you to take this. Boom. Movie magic. Is this about right, David? If I point right here, I can get all TikTok fabulous on this. Yeah. All right. So let's see. Provides coverage for 1 year and allows policy owner to renew coverage each year without evidence of insurability. Once again, without evidence of insurability, if I'm guaranteeing you can renew or I'm going to guarantee you can convert, how on earth am I going to start throwing limitations and stuff? Yeah, but you can only renew your policy if the end date falls on a Tuesday during a rainstorm in Miami where the entire city of Miami is getting wet at the same time. Because you know it'd be raining across the street, not over here. Because I don't know where that cloud went. I swear it's like 2 blocks over from here right now. But whatever. Whoa. Yo, so go right under that. Yo, my millennial, did I tell him to outline anything after that yearly renewable? I did, right? So I was like, did I? Yeah, I did. All right. I just threw him out there because he's over there like narcolepsy, right? He's right behind the camera, and he's like, yeah, that's good, Jay. What? What, Jay? Yeah, that was right, Jay. Yo, so go under. Okay, everything we've been kind of running through, but this, I got to explain this to you because they did a really poor job of explaining it to you. This last paragraph here, check this out. Yo, David, is this in screen? Yep. Yeah? All right, guys, right here, I want you to throw a little bracket on this, okay? And I want you to put a little star right there. And then let's talk about this, all right? I want you in that first line I want you to highlight reentry option. In the next line down, I want you to go, policy owner is guaranteed at the end of the term to be able to renew coverage without evidence of insurability. We already knew that. But underneath that, highlight however, and then grab your pen and underline that however. And then right under however, I want you to highlight the insured may submit evidence of insurability. And then right under that, for renewed protection at a lower rate. Okay, the reason I got to explain this to you is because we have a guaranteed renewable policy. I don't have to provide evidence of insurability, but I could. What would be the benefit? So catch this. I typically like to do this example with houses because we go around, some of the historic houses don't have the proper, windstorm protections. They don't have the proper hurricane straps. Maybe they don't have high impact windows, right? So those houses are below standard. Their premiums are high, right? Now take that in comparison to new construction where everything is just absolutely perfect. They got the high wind speeds and impact. That house qualifies for premium discounts. Why? Because it reduces the probability of severe damage. Now let's go back to the old doo-doo house. Look, I talk trash like that because you guys have been to my house, right? You know I got a couple of years on. They come back around, they're gonna make me put some straps on there, right? So, but you ain't hear that from me, but regardless, let's talk about my house. Let's talk about my house then, right? So if I did go ahead and put those straps on it, if I didn't, when I went back for a renewal, my premium is going to reflect the fact that there's a higher risk there, right? But if I had a contractor go in there and fix all this stuff and put all the high impact things on my old house, then poof, I would qualify for a premium discount. Why? Because I brought up the value of the house. I improved the survivability of my house. So now let's talk about your policy. If we've got your policy and I go through underwriting today, I'm in good shape, whatever, let's say I get my preferred. Next year when I go to renew, because we're talking about the annually renewable, if I don't want to subject myself to underwriting, I don't have to. Guaranteed standard risk, right? Even if I was uninsurable. But if I subject myself to underwriting, let's just say I do because I want to get a premium discount, and I come back uninsurable, so what? They got to come. So, all right, I guess I'll take my standard rate. But the flip side of that coin is, let's just say I'm still preferred. I would get a better rate, right? I represent a less of a risk. So the reason I had you do that is because when it comes to continuing education, for instance, the one class you must take every compliance period is that 4-hour law and ethics course. So me, who's my boss, that CFO guy at the Department of Financial Services, everything that I teach you comes out of the book. Everything that I've taught you, for instance, everything in this hour is identified to the state of Florida as something I'm going to discuss in this hour. Okay? So I didn't have anything in the course about premium discounts because I didn't think about premium discounts for us. And you know who else didn't? Pretty much the entire industry, because we sell policies and we talk about this and we put people through underwriting. But let's just talk about the 10-year policy. What's the odds if you were my client in 10 years, you call me to renew when you could just press yes on the app and renew your policy, or just do it automatically, right? There might not be anybody there to remind you of the benefit of getting a premium discount if you go through underwriting and turn out to be preferred. Please remember that. It's called a premium discount. The reason you would go through underwriting when you don't have to is to get a discount. The only other reason you would resubject yourself to underwriting in this class is because you're trying to increase your benefit amount. So let's get back again to option to convert. Oh, you didn't know I could pop it like, you knew I could with the shell tops, right? With shell tops like this, you knew I was out back in the day. It's like, baby, baby, baby. All right, so option to convert. Convert into what? Whole life. Whole life. Term life done and me want go. I don't know, man. What? You know I got to entertain myself out here, right? I'm just looking at a millennial and an iPhone. What kind of life is this? This isn't a life. Don't let the pool fool you. Don't let the umbrella pull. I don't know, man. I'm tired. Option to convert. 5222. What page? 87, right? So look. What are we converting to in that first line? Take option to convert, and then next line down gives the insured the right to skip that convert or, and then take exchange the term policy for a whole life plan without evidence of insurability. There it is. Do you think it's important without evidence of insurability if they're going to mention it in every single section? Yes, it's important, right? Now this next portion right here, this next sentence, they got all Yoda on us, okay? So we're gonna highlight the definition, but do you see the attained age method there? Highlight the attained age in the bold. And then right above that, well, I want you to highlight premium rate reflecting the insured's age at the time of exchange. Did you see I jumped over the word either? Scratch it out. Okay? So, premium rate reflecting the insured's age at time of exchange is attained age method. After that, you see the or? Put a slash in there, right? Like, because you have this the attained age method, you could also just put a nice line through or at the, right? And then highlight time when original term policy was taken out. The original age method. You see that? That was all Yoda'd up. So what do I mean? When I originally purchased the first policy, that was the original age, right? Today, I'm trying to convert my policy. I'm trying to attain a new policy. All right, which one of those policies is in my best interest? Which one of those policy definitions? It's going to be the original age because I was younger. Original age is always more beneficial. So look, let's go ahead and do this. Skip down to the next paragraph. We don't need anything else in that paragraph. Next paragraph down, just highlight original age basis. Premium will naturally be lower. Why naturally? Now all of a sudden, the state's got sarcastic tone with us too. Naturally, because you're renewing at a later date. You're older, so naturally it's going to be higher. I don't know if I like that tone. Anyway, let's just move on, right? That next paragraph down, I don't really need you to take any. It's small. Maybe just put a little star there and leave the whole paragraph blank. But if you just look at it, the option to convert generally, underline the word generally, not highlight, underline it. Why? Because generally is not all the time, and we're here to know what's specific. What can I test you on? Okay? So skip that. Now the next paragraph down, highlight in the very first line, option to convert and renew can be combined into a single term policy. Yo, don't play, man. I'm gonna go ahead and get my special effects on. You watch. I'm gonna be like, you think I'm not gonna try to make David find webs to shoot out there for that? I am in my mind, I'm like, I might as well be Tony freaking Stark, all right? I'm talking to you about insurance, but don't get it twisted. All kinds of stuff is happening in here, all right? So look, I'm getting the 1098. I got David back there. Wrap it up, B. When you get too long, it's hard to upload to YouTube. Anyway, look, the option to convert and renew can be combined into a single term policy. Right after that, 10-year convertible renewable policy could provide for renewals until age 65 and be convertible at any time prior to age 55. So I know you're watching this in real time, so you did not already start highlighting that. I don't want you to highlight that. I want you to just kind of put that with that star and just, you know, maybe take note. Put that in the side, note, because it's really just putting a little backdrop on it and explaining that obviously I can renew the policy until the age where I've got to either convert it or dump it. Okay, that's all it's saying. All right, so next page, term life premiums after these messages.